Welcome, welcome, everybody. I know we got a bunch of people still joining in here, but let's just see if this is working good. If anybody or everybody can use the chat, just let me know if you guys can hear me and see me, please. Make sure things are working as they should. Perfect. Awesome. Awesome. Okay, we got a few minutes before we get going here, but we already have a lot of people in here, so that's good. There's going to be a lot of ground to cover. This takes about anywhere from 45 minutes to an hour, depending on questions and things like that. So there's a lot to cover. So I'm going to try my best to get it all in that time frame here and get you guys out of here. So, but thanks again for coming. Appreciate it. Hopefully you guys are enjoying your summer. And I know it's sad, it's starting to wind down a little bit, but I just got back from camping myself, so getting back in the groove of things. I'm not ready for it to be over yet. So thanks everybody for showing up. Let me know. Feel free to use the chat as much as you can. Participation is definitely encouraged. If you have any questions, please throw it out there. I'll try to, we'll try to keep it more generalized to this. If it's a more personal question, I'm going to ask, just either wait to the end during our Q&A session or book a call with us and we can answer those questions on a more personal level and get things sorted out there. But yeah, again, thanks everybody for coming. There's still some more people going to be coming in, and we have about a minute to 2 more minutes before we get rolling here. Also, this is recorded, so if for any reason you guys have to leave or need to come back in and you miss something, by tomorrow, if not the latest, the day after, you will get an email from me with the recording, the booking link, the goodies that I promised you. So if you miss anything, it's okay. It will be there for you to watch later on. Or again, just book a call with us and we can answer whatever it is that you missed. So we got another minute or so to go and we'll get going. Okay, we are right at 7. There's quite a few of us in here. So again, everybody that's on, if you can hear me, see me, perfect. That's great. Again, a little housekeeping before we get rolling. Just feel free, again, use the chat as much as you can. I just like to keep questions more generalized. If it's more personal, again, there is a Q&A at the very end of this that I will stick around for to answer any questions that anybody has any additional questions. If not, again, I'm going to put it in the chat right now. This is the booking a call link. If you guys, when you want to decide you're going to have a one-on-one with me, feel free to use that booking link. It'll set up a time that works for both of us. That way I'm there and ready and available for you. I will be putting that in the chat, and it's also going to be an email at the end. So there is 2 of us on here. I am Andy Goddard. I'm going to be doing most of it. Robin Kraft is here. She is a mortgage specialist. So any financial questions you guys have, please, she will be able to answer all those in the chat there. So just keep chatting away. I'm just going to be running through all the information. So again, thank you everybody for showing up. Hopefully you guys are enjoying your summer, and we're going to get started here. This is the first time home buyers class. I'm going to show you some things to watch out for, how it all works, and how this process goes. So as I said in my first message sent out to you guys, you will be seeing a free ebook. So I do have a book. It's about buying your home. It has a lot of cool stuff in there. It's going to be sent to you guys in an e-reader format, so you can have it on e-readers, on your phone, on your computer, whatever. It's easy to read that way. Also, you're going to see a condensed version of a buyer's guide that also will be sent to you. So just for joining here today and taking time out of your day to be here, that's what I'm going to give to you guys, and that'll be coming in the next day or 2. So yeah, again, thanks again. So let's get going here. I know with social media, it never really helps, but there's a lot of uncertainty with the market and with all the negatives that are out there. And so I'm pretty sure a lot are feeling this, especially when it comes to buying a home, because it's honestly, for most people, buying a home is the most expensive decision you are going to make in your life. So we want to make sure that it's a smooth, easy, and a fun process, right? So feel free to let me know in the chat if you guys are feeling any of this. And my goal by the end of this is to alleviate most of those. And if I haven't alleviated all of them for you, again, book a call with us and I can answer everything to make you feel more at ease when it comes to buying your first home. So just a couple little things, some introductions for both of us. As I said, here's some reviews of myself here. I help these two people get out of their homes and find them something better. Just a couple things, just, how I work. I love hearing reviews, and that's my goal, is to make sure my, my work is great and you guys are satisfied with what I do for you. And so let's get on to who we are. I am Andy Goddard. I am a realtor. I have switched to eXp Realty as of January of 2022 this year. I switched over to this brokerage because it is a fast growing one. It's bigger, it's better. It gives me all the tools that I need to help service and provide you guys with the best service possible. I've helped many satisfied buyers and sellers since switching over. Lots of them have been first-time home buyers, because honestly, I love helping first-time home buyers. It can be a big daunting experience, and I like helping them out because I was one at one time too, and it wasn't a very good experience myself. So I'm doing this to try and not repeat the mistakes that I did when I was first buying my home. So I do live out here in Warman. I moved out here in 2016 from Alberta. I live out here with my wife, my son, my daughter, and our two dogs. We love it out here. It's where we call home. I do service Saskatoon and the surrounding areas, and honestly, pretty much anywhere in Saskatchewan if need be. But that's my generalized area, is Saskatoon and the surrounding areas. I'm going to put in here, I do have a Linktree address here. It has all my social media accounts, so both my personal and my business ones, so you know exactly who it is, who you're going to be working with, and speaking with you today. So feel free to check those out. It's also my booking link as well. So I'm going to be throwing that booking link, as I mentioned, in the chat a lot. So just watch out for that. So that is me. I am on the real estate side of things. So this is Robin Krapp. She'll be in the background. She will be answering a lot of questions for you guys on the finance side of things. She's been in the finance industry for over 20 years. She has since switched to ISAS Mortgages. Same idea, bigger, better, and to help service you guys a lot better. Services Saskatoon surrounding areas as well. And she also lives out here in Warman as well with her two kids. It's funny, she lives a few blocks from us. So we love this place. We call it home. And so this is who you're going to be working with. This is going to be answering all your questions as we go. And I'm going to throw her website in the chat as well. So you guys feel free to go ahead and check it out. And yeah, so that's who we are. We're here to help you guys in anything that you need. So I'm going to run through right away the main steps to home ownership. Now, this is a very, very condensed version of it because there's honestly so much that goes into it. I could go on forever, but this is a condensed version of it. So the very first thing I recommend to people is, if you haven't, come to this class I put on every month. I do this for everybody. It's free, and just learn everything you can. Take all the knowledge in. And then when you come to me, and if somebody comes to me and says, hey, I'm ready to buy a house, what's my first steps? My first thing I always ask is, are you pre-approved for a mortgage? Because without a pre-approval for a mortgage, we can't go house shopping. So that's the first thing. If you have, perfect, we can start it off and we can figure out more things. If not, I will send you over to Robin and we'll figure out how you are with pre-approvals and what you need to do to get there. So let's say we skip that part. You have your pre-approval, you're good to go. You come back and say, Andy, I got my pre-approval, I'm ready to go. What do we do now? I'll sit down with you. We'll either do it over a phone call, a Zoom meeting, or sit down face-to-face, and we can talk about what it is that you want in your first home, right? Do you want just an apartment-style condo? Do you want a townhouse? Do you want a detached home? What area of the city do you want? How many bedrooms, bathrooms, all that kind of stuff. We're going to figure every little detail you want in your first home, and we start from there. Once I get that list going, I'm going to see what's out there, what's available in that price range, send them all to you, and we'll start looking at different houses and see what options out there. I know the last few months prior in last year, it's been crazy to buy a home. Basically, if a home comes on the market, you get a jump on it. It is slowly starting to see that shift. I'm now able to actually sit down and we can look at different houses and slow down and make a decision. So it's very nice for you guys when it comes to buying a home. You're able to actually relax a little bit. So so that's good. So once we go look at a few houses and you find one, you say this one's perfect, I want to buy this one, we'll sit down and we'll figure out what we're going to offer them for it, go into the negotiation periods, right? Figure out when possession days are going to be, right? Figure out what else we need, home inspections, obviously. Once we get that idea done, we put it all in a contract, we send it off, and we get into the negotiation period. Once we get an accepted offer, both sides are happy, then we go into usually about anywhere from 10 to 14-day condition period. So conditions are obviously financing. If you are pre-approved for a mortgage, it's going to give Robin time to finalize that, because a pre-approval just tells you how much you're approved for. Now that we have an actual amount that you need, we'll give her that and she'll go in and they'll start finalizing the actual financing. So she'll need time to get that over with. We'll also need time to do a home inspection or a condo review, or both, I should say, depending on if you're getting a condo or not. But definitely a home inspection, which I will be touching on a little later. And then so once we get all that, once you're satisfied with the home inspection, once we know that financing is finalized and approved, we can do what's called lifting the conditions, which goes into a firm sale of the home. So now you are, we're just waiting for possession date. So the possession date could vary, depends on what's going on, right? If it's a vacant house, we can usually get there early as about 2 weeks after lifting conditions. If there's an owner or a tenant in there, right? Tenants could take a little bit longer to take possession because they need to be given the proper amount of time to move out. Owners, same idea. They need time to move out of their place too, so we'll have to figure that out. But while we're waiting for possession date to come, you guys will meet up with a lawyer, probably usually about a week before possession date. You're going to meet up with a lawyer and you're going to sign all the documents. So it's going to transfer all the titles over. It's going to make sure the financing is all good. Sign everything over, pay the lawyer fees there. You know, and for a detached home, lawyer fees are anywhere from $1,000 to $1,500 just to get everything finalized. So your financing, your transfer of titles, things like that. But you pay that at the end, finalize everything, and then once they send the money over to the sellers, we'll get keys released, and then possession date, I'll meet you at your new place with keys in hand, and we do what's called a final walkthrough to make sure you guys are happy, satisfied. And then once we're done there, we will take some pictures. I'll ask for a review, and we'll be on our way, and you are in your very first home. So really, that's a very, very generalized version of what happens. There's a lot of steps in there, but what I do to make it easy is I walk you through every step of the way, exactly explain everything as we go along. When we go to write up the contracts, I will sit there with you and I'll explain everything in the contracts and show you what it is that you're signing to make sure that you are comfortable with everything. And every single step of the way, I take care of it all. I will set up home inspections. I will set up the condo reviews, things like that. Everything I will set up for you to make sure it's all easy. You just sit back and we just make sure it's a smooth process. So again, if anybody has any questions on just the generalized buying process, I will be covering more stuff as we go, but that's just a generalized. If you have any questions, again, feel free, throw it in the chat, utilize the chat as much as you can. It's what it's here for, and we'll do what we can to answer those. So if anybody has any questions, let me know. If not, we're going to move on to the finance side of things. So we're going to cover mortgage approval, what programs are out there, and things like that. So yeah, and if I will be running through this pretty fast because there is a lot to cover. So if I'm a first-time home buyer, are you talking about the home buyer incentive program? Because if you are, that's going to be covered right away here. Or if you're just asking what that is, FTFB is first-time home buyer. Perfect, good question. These are all going to be the requirements for pre-approval. I will be getting into that right away here too. So all the financing stuff will be covered right here. It'll tell you everything about what you need to get approval, what they're going to look for, and what programs are out there for help. So yeah, and again, if you have any questions on the financing side of things, put them in the chat. Robin is here. She is the finance specialist. She will answer as much as she can. If it gets too specific, we're just going to ask you to book a call with us. Oh, somebody told you that the banks are the best first choice. Whew. That's I'll explain why that's not very that's not as accurate as somebody told you. And again, that'll be covered here too. I'm sure Robin's laughing in the background with that one, but I'll show you why. There's nothing wrong with your banks. Don't get me wrong. That's a little disclaimer. Nothing wrong with your banks, but I'm going to explain to you why it's better to go a mortgage broker than with your bank, but that's a little further on here. So, okay. So again, I've talked about mistakes before. Here's the first mistake is what's called a first-time home buyers incentive program. Now, the government of Canada has brought out a first-time home buyer incentive program to help first-time home buyers purchase their first home. They've used roughly 1.25 billion to help make home ownership more affordable. That number's from, I think, 2019, so it's been probably a little bit more higher than that now, but that's just kind of an idea of what they've spent so far. So what is it and how does it work? Well, basically it's a shared equity mortgage. Basically what the government of Canada is doing is investing in you and your property. So they're going to share an investment in the value of your home, both the upside and the downside of it. So the money that they give you is not interest bearing. You don't have to make regular payments on it, and you can pay it off anytime without a prepayment penalty. So what the government is going to do is they're going to match your down payment by giving you an additional 5% for a down payment. When it comes to buying a home, the minimum you need to purchase a home is 5% of a down payment. I will get into that a little bit here, but they're going to match that 5% and give you more money to help you out. And so I'll explain how this works and what to watch out for. But first off, who can be qualified for this? So basically anybody who's a Canadian citizen, a permanent resident, or a non-permanent resident who's legally allowed to work in Canada can apply for this. If you and your spouse are going in, as long as one of you has never owned real estate before, as long as one of you pretty much classifies as a first-time home buyer, you are eligible for this. If you are going in with your spouse to buy a home, your qualified annual income cannot exceed $120,000. The government feels if you make that much money combined a year, you don't need their help. So just something to watch out for there. The combined insured mortgage and incentive amount cannot exceed 4 times your total qualified income. So you can't buy anything for over 4 times the amount that your annual income. The maximum down payment they give you, so that 5%, it cannot exceed 19.9%. So what happens is at 20% down payment and above, you don't pay CMHC insurance premiums, okay? Anything below 20%, you have to pay insurance premiums on your mortgage. Now at 5% at the bare minimum, that's where you're gonna pay the most for these insurance premiums. And I'll explain why this is gonna help you with that. But they're not gonna give you this money to give you over that 20%. So if you have a 15% down payment, they're only gonna give you 4.9%. They're just not gonna help you exceed the 20%. And I'll explain that a little bit here. No, you have to have a down payment in order to buy a home. This is just going to give you extra of a down payment, and I'm going to explain why that's going to be a benefit to you. Just a side note here with RRSPs, if you have RRSPs, there's another first-time homebuyer incentive which allows you to take out those RRSPs up to $35,000 per person and use it towards a down payment. So if you and your spouse have RRSPs, you can take up to theoretically $70,000 worth for a down payment. You can use this plus the first-time homebuyers incentive program. You can use them at the same time. The only thing different is with the RRSP program, you have to start paying this back within the first 2 years of using them, but they can be paid off in chunks and installments and whatever, as long as you start paying them back. And the amount in the RRSPs that you're using has to have been in an account for 90 days. Just some things to think about if you want to use your RRSPs. It is possible, you can use it, but you just have to start paying it back within the first 2 years of using it. So then back to the first-time homebuyers incentive program, when do you pay that off? So there's 3 ways to pay it off. You cannot pay it back in installments, and I'll explain why you can't do it in installments, but you can pay it off when you go to sell your home. So using the proceeds of the sale of the home, you can pay them their money back. If you stay in a place for the full term, the 25 years, during that 25 years, you can pay it off by using a lump sum. So out of your own savings, pay it all back, or just refinance your mortgage with that in there to pay it off. The third and final way is at the end of your 25-year mortgage term, You can pay it off again by a lump sum out of your own savings, or take out a small equity loan because you built up a ton of equity in your home. So you're able to take out a little small equity loan to pay it off. And I'll explain here how the payoff works. So I said you can't pay it off in installments because they are investing in you, and when you go to pay it back, you have to pay them back 5% of what the value of your home is at the time of paying it back. Okay, so I might lose a little bit of people here because it's kind of a little bit finicky, but just bear with me and ask questions if you want. But let's just say we're going to buy a house worth $400,000. So that's how much it is at the time of purchase. The 5% they're going to give you is $20,000. Now let's say in 5 years, you go to pay this back. Your house value now is $500,000. You have to pay them back 5% of what the value of your home is worth at the time of paying it back. Right? So now your property value grows. That's where they're going to make money off of you because they're investing in you. They want to see your value grow. So they want to see their investment grow. Right? So just something to watch out for. That's why you can't pay it back in installments, because they want to know how much your place is at the time, the value of your home is when you go to pay it back. Now, on the flip side of things, let's say in 5 or 10 years, something happens and the value of your home is now worth less than what you paid for it. You only have to pay them back the 5% of what it's worth. So if it's only worth $300,000 now, you only need to pay them back $15,000. But the idea is we're going to find you a place that's going to grow, that's going to increase in value, not decrease in value, right? But just some things to watch out for is that you have to pay their 5% back of what the house is valued at the time of paying it back. So just things to watch out for. So I'm pretty sure a lot of people are thinking, you know, what's the benefit to this? Why should we do this if they're going to give me money, but I got to pay them more back in the long run? So here's where the benefit lies. So you go to buy a new home, $400,000 home. The minimum down payment you need is $20,000 for that $400,000 home. Without using any other incentives, you're going to have to borrow $380,000 from the bank. Now, when the government of Canada chips in their 5% for an additional $20,000, you're going to get $40,000 for a down payment. So now you're only going to need to borrow $360,000. So the amount of money you're borrowing is now less. So your payments are going to be less. And when I talked about those insurance premiums that at 20%, you don't have to pay those. So if you're only paying 5% of a down payment, that's when they're at the all-time high for premiums. Once you go to 10%, those insurance premiums drastically drop. 15%, they're even a lot more smaller. And then at 20%, they're gone, right? So this is going to help you borrow less from the bank at the start and pay less in insurance premiums. That's where the benefit lies. So it's just going to help you get rolling, get you in your first house, help you with a bit smaller payments. Yes, you're going to have to pay it off later on, but it's just to help you get rolling. The other thing it helps with too is let's say you're pre-approved for, I'm just going to throw a number out there, $600,000, right? If you're pre-approved to buy a home for that, fantastic. But let's say your down payment you have saved up is $20,000. Well, you may be approved for $600,000, but if you only have $20,000 for a down payment, you're only going to be qualified for $400,000 because you can only be qualified for as much as you have as a down payment as well. So if the minimum you have is $20,000, you're only going to get approved for $400,000, even though you could go higher, but you just don't have the money there. So if the government's going to give you another 5%, they're going to up your down payment to another, they're going to pretty much double your down payment, which is going to put your pre-approval even up higher because now you're getting a little extra funds to help get more of a down payment, right? So that's kind of where this incentive lies with this. Just to summarize again, less money borrowed from the bank, less monthly payments, less insurance premiums, and it can also help you get into a higher pre-approval because you're getting extra money for a down payment. Okay, so that's where the benefit lies in this. There's a lot to cover with that, but if anybody has any questions on that, feel free to let us know. If not, book a call with us. We can explain it a lot better. It's just there's a lot that goes into this, but it's definitely a helpful thing if you need it, right? It gives you a bigger down payment, things like that. So it's definitely helpful. I'm going to put it in here again. Oh, I missed it. But anyways, I'll put my booking link in here once I get back to it again. Let's see if I can find, sorry, I had it with me here, but here it is. So here's the booking link again. Feel free to book a call with us if you want to explain some more on it. But yes, we'll move on. This is the first time incentive program. If nobody has any questions on it, either we can wait till the Q&A or keep throwing in the chat there. Robin will be able to answer questions. But I'm going to move on to what it takes to get approved and what they're going to look for. So mistake number 2 is not getting a pre-approval. Now, again, when I said if somebody comes to me and wants to buy a house, the first thing I say to them is, do you have a pre-approval? This is the biggest thing. If we don't have a pre-approval, we can't shop for a house, right? It's just, it wastes a lot of people's time. So namely, it's going to waste your time because you can't buy these houses. So we're just wasting time getting there, wasting my time, wasting the seller's time because we're kicking somebody out of their house to look at a house that we can't buy. So this is why it's so important to get pre-approved. So there's 3 things they're going to look for when it comes to mortgage approval. It's going to look at your credit, your income, and as I mentioned before, your down payment. So the first thing they're going to look at is credit. So they usually want to see about 620 to 650 as a good starting point for your credit, right? That's where they're going to want to look. They're going to look to see if you have any outstanding debts, if you've got any credit card payments that are way past due, or any other kind of loans, any debt that you have. So car payments or something, credit cards are another thing, any lines of credit, things like that. Make sure your payments are on time. Make sure you don't have collectors coming after you, things like that, right? Second, they're going to look at your income. They're obviously going to want to know how much do you make. So what they ideally want to see is they're going to want to see 2 years worth of income taxes just to see what your income is. If you have a salary position where you know what you're going to make every month, that's even better because we can go to your employer and ask for a letter and they're going to tell us how much you're going to make as a salary. That's even better. They can avoid looking 2 years prior. Now, for people that are new to Canada, there is what's called a new to Canada program. So we know that when you come to Canada, some people might not have that 2 years worth of income to show, right? So what they have is a first time or a new to Canada program, sorry. So that you're new to Canada, you don't have a lot of income or not income, sorry, you don't have a lot of credit built up yet. As long as you've been here for 6 months is usually the minimum they want to see. As long as you're here for 6 months and a maximum of 5 years, you can use this new to Canada program. I have had an instance where you were able to use only 4 months worth of back history and use some history from your previous residence, but that's per person. But anybody new to Canada, there is a new to Canada program that can avoid that 2 years worth of looking at income statements, just so you're aware. And we can talk about that more as well. And ask questions about it, we'll be able to answer that. So that's what they're going to want to see with income. They're going to see how much you make, check out what your debt is. And then the third and final thing is they're going to want to look at what I mentioned before, down payment. Again, minimum down payment, 5%. They're going to want to see where that's come from as well. So again, anybody that's new to Canada, if you've only been here for a few months and you're bringing money from where you've come from, I've had people come from Nigeria and India and things like that, and they're bringing money over into Canada, you have to just watch out. If you're using the money from there and bringing it over and using that for a down payment, the money that you're using for the down payment has to be in a bank account here in Canada for 90 days untouched. So if you're constantly filling that account with money that you're going to use for a down payment, every time you transfer money into it, it resets that 90-day counter, right? So the full amount, if you're going to use 10,000, 15,000, 20,000 for a down payment, whatever you're going to use, that full amount has to be sitting there for 90 days minimum. Okay, just to watch out. That's for anybody new to Canada. That's just something you got to watch out for. But that's what they're going to look at their down payment source. They're going to see there's 3 to 4 ways to get a down payment. First off is your own savings, which is the main one. Second one is using that RRSP program, as I mentioned before. The third one is what we like to call the bank of mom and dad. You can get it as a gift from an immediate family member saying, here, we're going to give this to you to use for a down payment. And there is some paperwork with that to show that it is a gift. Now, if you and your parents or whoever's giving you the money has determined you're going to pay it back, that's okay. That's between you and who's ever giving you that money, right? In the lender's eyes, they have to see it as a gift. If you're saying you're going to borrow the down payment from your parents or from an immediate family member, they're going to see that as more debt because you're borrowing money. So it's going to go against your your lending power, okay? It has to be a gift. The fourth way is more inclusive. This is for anybody who is part of the Métis Society of Canada. The Métis Society of Canada is giving up to $15,000 for a down payment. The only thing is with that is if you're part of, you have to be part of the Métis Society of Canada. You have to be approved for a mortgage in order to claim that money. And then there's some other stipulations with that. And if you want to know any information on that, let me know, reach out to me. I have a bunch of information I got from them that I can send to you so you have an idea of how it works. But that is another option, is for a down payment if you're part of the Métis Society. So those are the three basic things they're going to look for to start you off with mortgage approval. So they're underwritten. So they're going to review your income, your credit, your down payment source. They're very reliable because it tells us exactly how much we can spend and buy a home with, right? Let's say it's $350, that's the maximum amount we can shop for. So we're going to shop anywhere in the $250, $300, $350 area, whatever it takes, right? But at least we know and we have an idea, and it's good to go that way. So that is such a big thing to have. And again, for savings, we're going to shop with confidence, because honestly, if we're looking at $400,000 homes and we find out we're only approved for $300,000, the difference between $400,000 and a $300,000 house is huge. So we just don't want to raise those expectations for only just to be crashed back down. Okay, this is why it's so important to do this first before we start looking at houses. So that's a big thing. So the New to Canada program is basically just to help lenders, because you are new to Canada. You do not have a lot of credit built up in Canada yet because you just got here, right? So if you've been here for less than 2 years, they're not able to look at 2 years worth of income statements and things like that. So basically they're just have this program that as long as you've been here for, they want to say at least 6 months, at least so you have some sort of credit built up here, that's what they use. But yes, Robin has a good point too. There's so a lot that goes into it. So yeah, it could be a lot. So I would say, again, I'll put it in here. Book a call with us. But basically, just to put it really simple, the New to Canada program is to literally help people that are new to Canada, just to help them be approved easier, because they look for a lot of things to approve you with. So this is just to help you guys out. But that's the pre-approval process kind of there. There is one other thing I've had people ask me about. This is kind of for people that are approved, that can be approved, but they just don't have really good credit. Their credit's a little lower. You can use a cosigner to help you out with that, right? So a family member is able to co-sign for you, an immediate family member, I should say. The only stipulations is they have to reside in Canada, they have to have an income, and they have to also be able to be approved for a mortgage themselves. If you want to use the first-time homebuyers incentive program with a co-signer, as long as you and your co-signer's annual income does not exceed that $120,000 mark, you can still qualify for it. Okay, there's just, as a co-signer, there are risks. If you aren't paying your mortgage, the lenders are going to come after, the co-signer, right? So that's the big risk for them. So they're putting their name out for you to say, yeah, they're good for it. They just need a little help with their credit. That's, so we'd like to talk with them about it, make sure they understand what they're getting into. But they're committed to being a co-signer for you for as long as you can't get approved for a mortgage on your own. Once you've built up a better credit history and you have better credit, you're able to be approved on your own, then we can go about getting them off the title and just yours and getting the co-signers off of there, which would just be, some administration fees from the lawyers just to get their name off the title and things like that. So it'd be a couple $100 depending on the lawyer, right? But those are just the extra costs. But yes, co-signers are definitely a thing. If everything else is good, down payment, income, and all that is great, your just credit's a little bit iffy, co-signers is another option to think about. First-time home buyers incentive, you get 5% from the government. They're going to match your 5% or whatever it is you have for a down payment, right? But they're going to give you 5% for resale homes as well. So if you're buying a used home, that's what they're going to give you 5%. If you buy a brand new home, like a new build, they can be somewhere up to 10%, but new builds are a little bit different. I will touch a little bit on it, but not a whole lot, because most people who buy their first home, chances are it's a resale home, not a brand new one. And yes, you do need to have the minimum 5% as a down payment to get pre-approved. So yes. Sorry. That's, yeah, I always thought about that one, and that is a good question. Robin's going to be great to answer that one. I feel that as long as you have yeah, you know what, it's probably going to be easier if I let Robin answer that one with resetting the counter there. I just don't want to give you the wrong information on that one. So anyways, I know somebody had that where they said that using your bank is better than a mortgage broker. Again, I'm going to explain why that is not necessarily true. Using this information and my own actual account of what I've dealt with when using banks. So again, a little, disclaimer, there's nothing wrong with talking with your bank, right? Everybody has a bank. I have a bank. I use RBC myself. And I use it for my checking, my savings, my TFSA accounts, RSPs, things like that. My dad's a general manager of a credit union back in my hometown. So again, there's nothing wrong with banks, right? There's nothing wrong with using them, but I'm just going to explain why a mortgage broker is such a better option instead of just going to your bank. But I just want to share a couple scenarios out here. The scenario on the left. So this lady, both of these families used their bank to get them a mortgage. So the lady on the left, this was in 2020 when the pandemic first hit. So like fresh, nobody had a clue what was going on, anything like that, right? So this lady on the left owned her own business, and when the pandemic hit, it took a really hard hit to her business to the point she had to close it down. She also has a basement suite in her home that she had rented out to a tenant. But again, once this pandemic hit and locked everything down, her tenant ended up moving out and they went to live with family. She also had an Airbnb room that she rented for people traveling in and out. But of course, once everything was shut down, nobody was traveling. So in a very, very short period of time, she lost her main source of income, her business, her downstairs rental income went away, and her Airbnb rental went away. So in a very short amount of time, she lost pretty much everything. So she felt she had no other option but to sell her home. She could have deferred her mortgage payments like banks were offering at the time, but she didn't know how long this was going to last, and she felt she was just going to get further behind. So she just decided, I'm going to sell my home. She knew what the realtor fees were to sell her home, all that kind of stuff, right? So, but what she didn't know is that a prepayment penalty attached to her mortgage was $30,000. So that's a major, major thing not to know about, especially when you're relying on the proceeds of the sale of your home to fund whatever, whether it's your new house you want to buy or, whatever, or if you have a big issue like this and you need some funds to help you out, $30,000 is a huge hit. All right. So same idea with, with this other couple. They're from Haiti, and they were involved in a lot of nonprofit organizations over there. And so when the earthquakes hit quite a few years ago, they were asked to run an orphanage down there. So they decided they're going to sell their home, use the proceeds of the sale of their home to fund them living there for a year or two and help rebuild. What they didn't know is that there was a $17,000 payout penalty. Again, when you need the funds from the sale of your home to fund whatever it is you need, that is huge when you don't know that's going to sit there and hit you, right? $17,000, $30,000, it's an insane amount. So it's just something to watch out for. So how do we help with that? Bank penalties can be very expensive if you don't know about them. The nice thing about using a mortgage professional, a mortgage specialist like Robin, is that we're able to shop around for you, and I'll explain some more of that, and find you either little to zero payout penalties. We cannot guarantee zero payout penalties, but at least we're going to let you know what they are and, avoid the big $30,000 to $17,000, right? At least give you an idea of what to watch out for, right? We're going to give you that knowledge so you're not blindsided when you go to sell your home. Because, honestly, we are looking to buy your first home. When it comes to buying your first home, majority of the time it's not your forever home, right? So there's reasons that, you're going to eventually want to move out of it into something bigger and better, right? You're outgrowing it with your family, they're getting bigger. Your job goes away, you're changing jobs, you're moving, whatever it is, you need to pay out your mortgage early because a lot of people don't last that 25 years in that house. We want to make sure that whatever you need to move for, that you're not going to be penalized for doing so, right? So just things like that to watch out for that we're able to help you out with so you know what you're getting into, all right? And so as somebody asked before, is it better to use a bank or a broker? So here we go. A mortgage broker has access to over 30 different lenders' products. So they can easily shop around, see who has the best deals, the best rates, all that kind of stuff. They work the same hours as I do, which is basically you need me, you get a hold of me. We work weird hours, right? You need us, we'll be there for you. She's going to offer you the best mortgage rate up front. And they work. The nice thing is, as our services are, their services are free as well. Again, I should have mentioned this earlier. When you go to buy a home, you do not pay realtor fees to buy a home. Same thing as you do not pay any fees to buy or to get a mortgage, right? The realtor fees are paid out when you go to sell your home. So when you sell a home, that's where the realtor fees come in. So with this, you don't have to pay the realtor fees and you don't have to pay any mortgage fees, okay? Just things to look out for. And the nice thing with the mortgage broker is you can call or text them anytime with any questions. So the thing is, I've dealt with this quite a bit. It's easy, so easy to get a hold of a mortgage broker, right? Like I said, same thing, works the same hours as me. We all know what bankers' hours are. You always hear that. So the difference with this and a bank is the bank is restricted to their own product, their in-house product, whether it's TD, RBC, Scotiabank, Bank of Montreal, whatever it is, they usually sell their product and their product alone. They work their normal bank hours. So whatever it is, we usually use the ones at 8 to 5 or 9 to 5, right? Your mortgage rates are going to be what their bank posted rates are. So if you want a better rate, you sometimes got to negotiate that, right? And some people don't like to negotiate, right? They're a personal broker that works for the bank. So they work for the bank, not for you, in terms. So they're kind of looking what the benefits of their bank is instead of you. And they are a lot harder to get a hold of. So this is where I ran into an issue before. I was helping a couple sell their home and buy them a home. So we were in that process. We sold their home, had an accepted offer on it. We went and shopped and we found a home and we put an offer on it. So we were dealing with multiple offer situations. So we had a lot of things going on. We were trying to get the best offer out there to win this house because it's a beautiful house. And there was a question that came up and I needed to get a hold of their mortgage specialist. Well, they work for a bank. I can't say what bank because this is a recorded webinar, things like that, but they were using a bank. Well, it was 7 o'clock at night. I could not get a hold of them. They were done. I kept getting their voicemail saying, yeah, I'll get back to you in one business day or the next morning or whatever. Because once they're done at the office that day, they are done. If they were using a mortgage broker like Robin, I could have easily gone on the phone and says, hey, Robin, it's 7:30 at night. I need this. What do we do? And she would have been able to help us out right there, right now, and we wouldn't have to worry. But because we didn't, we kind of had to take a shot in the dark and hope for the best. And we ended up winning it, which was the good thing. But the downside is if we would have lost that offer just because the person they're using to give them money was not available at the time, that doesn't look very good. This is why a mortgage broker is so much better than using your bank, right? We don't want to, if you lose out on a very, very good home just because we simply couldn't get a hold of them at 7 o'clock at night, which when it comes to real estate, majority of deals happen during the evening because everybody's off work and that's when they're available. So that's some things to think about. Now, again, nothing wrong with using your bank. You can go in there and tell them you want to buy a home. They can give you their rates and what they're going to offer you. And you can take that and come to us and say, this is what they're offering. What are you offering? And we can either see if we can match it or better or whatever, right? We can work with that, right? So again, nothing wrong with your bank, but those are why it's so much better to go with a mortgage broker. Way easier to get a hold of, way more options, way more products, and way more better rates, right? So just things to think about. Does anybody have any questions on mortgage brokers or banks or anything on the finance side of things? I see Robin's been answering a lot of questions. I really appreciate it because if I sit here and try to read every question, we'd be here forever. We got about another 20 minutes or so here, and I'm going to get into the real estate side of things. So yeah, if anybody has any questions, keep throwing them out there. That's pretty much the generalized idea of the financing side of things. Again, if you have any questions, keep throwing them in the chat. There is a Q&A at the very end of this, or again, as I mentioned, book a call with us. We'll be here. We can answer calls, do a one-on-one thing, and go from there, right? So again, appreciate all the questions, but that's kind of it on the finance side of things. And then, yeah, so if anybody's having any questions, we're going to move on to the real estate side of things. yeah, the rates are going to be what they are, right? They're only going to do the one credit check on you, but because they just need to know what your credit is. Other than that, the rates, they're going to give you a list of what their rates are at the current time, whether it's variable rates, fixed rates, 5-year fixed, 3-year fixed, whatever. They're going to give you a big sheet of what the best options are. Oh, 100%. Yep. Oh, yes. Oh, yeah. You're pretty much like us. When you deal with a mortgage broker and get a mortgage from them, they're definitely they're going to be with you the entire time. You know, 5 or 10 years down the road, you have a question about it or want to refinance, boom, you just go ahead and call them, right? You can call them anytime. Same idea. They're not going to give you a mortgage and walk away on you. That's not how it works. Same with me. Once you buy a home, you know, yes, our transaction is done, but I'm never done. You need anything, you come to me, I'll help you out. If you need contractors for anything, things like that, yeah, we're never done. So definitely, yeah, you'll always be in touch with them. Yeah, I can see, yeah, I'll have a copy of the PowerPoint after this, but I can also, like, it's going to be recorded, so you'll be able to see all of this at any time. I'll send it all off in an email after. Yeah, I'll see there's a lot of, yeah, keep them coming. So yeah, I'm just gonna have to jump ahead. I'm gonna keep these on the back here. There is a Q&A at the end, and I'll get to some more of these questions here. So realtor fees, again, there's no realtor fees when it comes to buying a home, right? When you go to sell the home, right, it's mainly, it can be negotiable. Most of the time we do what's called a 6, 4, and 2, so 6% of the first 100,000, 4% of the second 100,000, and 2% of the remaining value of the property. And it's all the seller pays for that, right? And so, like, I can get into a ton of ways how the realtor fees are split, which I can explain here later on at the very end of this, explain how all of it works and why and things like that. But I do have to move on because we're running out of time here. So I'm going to go keep throwing the questions out. I'll try and get back to them during the Q&A section there, but we do have to move on a little bit here. So back in the real estate side of things, I mentioned earlier that about new builds. So I'm going to touch on it just a very little bit because most times when people are buying their first home, chances are it's not going to be a brand new home. It's going to be a resale home, but some do. So I got to touch a little bit on this. So this kind of the same thing along with builders as with banks. A builder is going to build their product and only want to sell their product and their product alone. And so, you know, I want to make sure that you're getting the best of what you're spending your money on, right? So there's nothing wrong with going to a builder to see their product. What's wrong is that they're only going to want to sell you on their product and their product alone. They don't really have your best interest. They're only going to want to sell their product. Whereas I'm working for you, I'm there for you every step of the way to show you all the different options that's going to fit you the best, right? Also, I know who the good builders are, who the bad builders are. I can't drop names in here because, again, it is recorded and that's just a liability thing. But anyways, things like that, right? Things to watch out for too is that they offer packages, right? So most of the time you go to buy a new home, chances are the basement's not finished, the garage isn't there, there's no landscaping done, right? So when we go in there, they'll have packages for a basement, right? So it's going to cost X amount of dollars to finish the basement. It's going to cost X amount of dollars to put a garage up, right? You know, so I'm just going to use random numbers. Just don't quote me on it, but just let's say $60,000 to put the basement in, and another $40,000 to put a garage on, or $20,000 to put a garage on. We can go in there and say, you know what, that's actually a pretty good deal. That's not bad if that's the route you want to go. Or, you know what, that seems a little high. Depending on contracts and things like that, we could probably do a little bit cheaper, right? And then there's other packages like appliance packages and things like that. So when it comes to new builds, it's not like resale homes, whereas they don't really like to budge on the purchase price, because the minute they drop price on one home, then the whole rest of their new builds start to drop in price. So they want to keep the price where it's at, but we can still negotiate other things like appliances and packages and things like that, right? So if you want a new build, they're not going to budge much on the purchase price, but we can say, hey, well, we want you to include appliances and things like that. So that's something I can help you with instead of just going directly to the builder. right? They're also you're gonna want to watch out for the contracts, right? So, so yes, with contracts, some builders have it in there that if the price of materials goes up, so does the purchase price of your home. So let's say you close on a home new build at, let's say, $500,000, but all of a sudden the cost of materials went up, that's going to raise up the price a little bit too. So we want to make sure when you go to sign that that's not in there, or at least you're aware of it, things like that, right? So we get it. It's good to have me to go with you to see these kind of things. So you get a lot of knowledge when you bring me to go to a builder. Now, some people have also asked, is it the same amount? Is it going to cost me less or more to bring me with you to go buy it, or is it going to be the same if I go directly to the builder? And it's the same exact price if you go straight to the builder than if you bring me with you, right? They know that a lot of us realtors are going to sell their products, so they kind of fit our fees and services into their purchase price. So it's no different than if you bring me along. And why not? Because you need so much more information on it, so much more options we can look at, other new builds in different areas, things like that. Okay, but again, I don't touch a whole lot on new builds because most first-time home buyers just don't deal with it, but just there's some ideas for you. Fees, again, the whole fees things, I'll get to all of that at the very end. I see a lot of that with that. But yes, I'll get into some more of these here. But yeah, keep them coming. I'll try to answer them the best I can at the very end. But I guess, so the next thing, you guys, I talked about this earlier, is a home inspection. Now, a home inspection is a major, major thing to have. It's built into the conditions, which means if a condition is not satisfied, you can walk away from the deal with no issue, okay? That's why these are built in the conditions. So the main conditions we usually have is conditions of financing, so make sure your financing is going to get approved. Home inspection are the two main ones, okay? Does anybody know how much a home inspection costs in the city? And you can just throw a number out there. But there is, I know what the averages are, but I just want to see if anybody else knows what those are. Oh, yeah, so we're close. Yep. For a detached home, I know my guys do it for like $425 plus GST, so you're looking around, I think, like $440 for a detached home. And then if it's a townhouse, it's a little less. If it's an apartment condo, it's even less. So I want to say like $300 for a small apartment condo, but it's anywhere around the 400 mark, 450 mark, right? So, and I've had some people say, well, that seems like a lot of money. Well, it can be, but when you're buying a $300,000, $400,000, $500,000 home, that small little investment to tell you everything about the home is such a huge thing to have. And again, same idea. If we go in this and the home inspection is a disaster, you can walk away from this house, right? We want to make sure that this house is solid. So house inspection is not mandatory when it comes to buying a home, but it's just highly recommended. I always strongly recommend getting one done. If you choose not to, it has to be in writing, because yeah, it's just, if things go wrong, we need something to back up. And that is a good question. I see that just came up. An independent house inspection, yes. I might have read that wrong, but yes, an independent house inspection per home that you're going to buy. So most of the times we're going to offer on a home, and that's going to be the home to do, right? That's the home that we're buying. We're not looking at anything else. So we do one home inspection on that home. Yes, you cannot use, you have to use a professional home inspector in order for me to take things back to negotiations. If you say, I have a buddy that does home inspections, but he's not certified or licensed, and he goes in there and says, well, this needs to be fixed, I can't go back and say, well, his buddy said that this needs to be fixed, so we need that fixed, right? It has to be a licensed licensed home inspector. So anyways, about these home inspections, when we're looking at homes and seeing which places you like the best, well, you guys are looking at the home. I'm also looking at other things. I need to look at the roof, make sure the shingles are in good shape. I need to see a lot of the visual of the home, because if we see something a little out of sorts, we can take that when we go to write our offer. So if we notice that the shingles are in really, really bad shape and then they're going to have to be replaced soon, visually see that, we have to write that in the first offer, saying that, we want a little bit less because the shingles are going to be replaced, right? If we going to a home inspection and they say the shingles are going to be replaced and we can physically see that, we can't really take that in negotiations. And I'll explain a little bit of that later on. Kind of get a little iffy, but anyways, what can happen is in these home inspections, these guys do not miss a thing. They have so many tools to check on everything, right? So they can see through walls with their cameras. They can see if there's any insulation missing, see if there's moisture in the walls, any mold, things like that. They can see into the attics. Same thing, right? They can see things that we can't see. They'll test every single thing, the appliances, all the plumbing, they'll test electrical. Like there's nothing they miss on these places. They're going to check the foundation, everything like that. Make sure everything is sound. Make sure everything's working properly as it should, right? You're spending $450 on these things, and you're going to make sure that this is good, right? They're gonna give you a big list of things to look out for. Or sorry, I shouldn't say a big list of things to look out for. A big list of your home, what's working, what needs to be looked at, what's some maintenance, things like that, right? And some examples of it is a couple of last places that I've sold or bought for people, I should say. One of them was he popped his head up into the attic to take a look, and he noticed that the vent from the bathroom was supposed to vent up into the roof, like onto the roof, sorry, and out the vent pipe on the roof. But what he noticed is that the pipe was slightly off from that vent and not insulated. So all the moisture that's sucking from the bathroom when you shower, all the steam gets sucked and it's pumping into the attic, not to the outside. So obviously you're going to have a lot of moisture up there. Mold is going to happen. And especially in the wintertime, things are going to freeze up and things like that. So that was part of the inspection. So I was able to go back to the seller and say, hey, look, that's a big issue. We want that satisfied for us. They went and they fixed it, took pictures of it, showed that the pipe was connected properly, had the proper insulation around it, and it was all fixed before we were moved in. Other things like the electrical panel on the one, the dryer was supposed to be on a dual breaker with a pole. That way, if the breaker trips, both breakers trip. So, but that one in that electrical panel didn't have the pole on there. It was just two separate breakers. So if the dryer was going and tripped a breaker, only one of the breakers would trip, which is very dangerous, especially when it comes to a dryer. So we had them address that, make sure it was fixed before we moved in. So a lot of these things are going to need to be fixed as long as it affects move-in and safety issues, right? Little things like, marks on walls and like maybe there's a hole in a drywall, things like that, right? Those are just little minor things. It's not going to affect you living in the home, but it's other things like, things like that are going to affect the long run and the longevity of the house, right? So and if we go back and say we want this list of things fixed, if the sellers sometimes aren't willing to fix it, then we go and we negotiate maybe a little bit off the purchase price to help satisfy that you got to fix that, right? Things like that we can do. There's other things. Or if it's a complete terrible disaster of a home through the home inspection, like they find a ton of mold or things like that, we can walk away from the deal as well, right? So it's such a good negotiation thing, right? So it's such a strong thing to have. I'll even use my own house as an example. I have a 2-story home. Our main bathroom on the upstairs has an ensuite bathroom, our main bedroom has an ensuite bathroom with a shower. And my home inspector noticed that there was a slight leak from the shower going into my main floor bathroom, so the one room below. Very, very small leak, just noticed it. And we were able to fix that, seal it up with just a little bit of caulking around the shower. But if I wouldn't have noticed that, because you wouldn't have been able to see that till it was way too late, that'd have been a lot of money to fix a lot of water damage. So it was nice to see those things. It'll just show you so much of that stuff, right? They don't miss a thing. So again, it's highly, highly, highly recommended that you get a home inspection because it's just a big book of things. And I've had this asked before too, what happens if we do a home inspection on this home, it's bad, or we walk away from it, or we're gonna have to find another home and get another home inspection done and spend the same amount of money. And unfortunately that can happen, but I know my home inspectors that I use will offer a deal. So if you do a home inspection and it turns out awful and you walk away from it and we have to go do another one, he'll offer it at around half price and do another one for you. So things like that. But we go in with, I've never had it happen where we've walked away from a house to a home inspection so far, right? Knock on wood, but it's just something to think about. Flooded basements, so there's also, that should be disclosed to the sellers, right? And there should have been obviously a insurance things dealt with that, right? And if we do look at a house and it has a flooded basement, or it's, there was mold at that time, there's a good chance we might not even want to deal with that, and we walk away from it, right? So, I have been in houses. I was actually in a cabin out at Pike Lake here last weekend looking at a place, and there was a ton of moisture in there. It was smelled moldy. You could see mold. We didn't even, we were able to see that before we even made an offer on a place. So that's just, a whole flooded basement's a whole different volume. But we've bought houses with flooded basements before that has been flooded, but they provided us with receipts and confirmation that it's all been fixed and rectified, and the issue that was there has been fixed, and it's no longer going to happen again. So there's those things too. So yes, they're able to find all that kind of thing out, right? So yeah, again, big thing when it comes to home inspections, can cost you a lot of money in the long run without having it, because if you move in and something blows up right away that could have been prevented with one of these, it's going to cost you a lot of money. That's the last thing we want, is you to buy a home not knowing what needs to be looked at or worked on, because I've seen a ton of homes, and every time I do a home inspection, there's always something else, something new that I learned, something new that we see. So it's always something different. So I highly recommend never skipping a home inspection. So yes, again, if anybody has any more questions on the home inspection side of things, let me know. Just trying to looking back here to see if there's anything. So liabilities for home inspectors, obviously, if we buy a house, I haven't had this happen to me personally before, but I have heard from other agents before that they've done a home inspection and they use a home inspector and they missed something, like let's say a furnace or a hot water heater they didn't inspect properly, and they go in and the hot water heater blows up on them the first thing, and it should have been known. Then we definitely go back to the home inspector and deal with that. I'm not 100% sure the legal ramifications of that, just because I personally haven't dealt with it, but that is a good question. It's definitely something I'm going to look into. Yeah, and again, that's a really good question. Like, right, if it's not done properly, yes, that's a very good question. Again, the home inspectors that I use are stellar. I have never had issues with them. They've been highly recommended by many people. I have yet to run into, but sometimes people say they want to use a certain home inspector. That doesn't come up that often, but that's a good question. I'm definitely going to figure out more of that, and I can definitely answer that question for you later on when I figure more of that out. But I appreciate you bringing that up. Thank you. But yeah, that's kind of it with home inspectors. It's such a big thing to have. It's such, for the amount of money you're spending on it, it's worth every penny. All right, so we'll move on a little bit here. We're running a little late on time here, so I got to get through this next one. And this is to do with the condo review document. So what we call, when we go to purchase a condo, so anything that has condo fees attached to it is part of a condo corporation. These are built into the contract. It's mandatory to get these from the sellers. The sellers pay for them and they send them to us for us to review. What's not mandatory is these things being checked out by a lawyer. That's the non-mandatory part. But again, like a home inspection, I highly recommend it gets sent right to the lawyer. When I get these, I'll send them to you, but we'll talk ahead of time, and it just should go right to the lawyer, because there's a ton, like it is a thick book of information on this condo. I kind of have an idea of what's in there, but I'm not certified to explain it to you properly. That's why the lawyers need to. But I can touch on what there actually is to look for in these and what the lawyers are going to look for, just so you have an idea. And the same thing with these condo reviews. So these estoppel packages that we get, same as a home inspection, they are a condition. If we see something in here that we don't like, we can walk away from the deal. So yeah, so it's things like that. Lawyer fees are all dependent on the size of home and what the lawyers need to do, right? But roughly you can be anywhere from, depending on the property, anywhere from $800 to $1,500. If you're buying and selling a house, obviously it's going to be a little more than that, but that's kind of roughly the amount for lawyer fees. And it's all dependent on lawyers. Every lawyer charges different, right? That's just kind of, it's like everything, right? But that's kind of the rough amount. So anyways, with these condo review documents, the lawyer's going to look it over. The biggest thing in these things is what's called the reserve fund. Every condo has a reserve fund, which has the amount of money they have saved up from condo fees put into it. So when you pay condo fees, let's say the condo fee is $100 a month, there's going to be X amount of dollars from that $100 that gets put into the reserve fund from each and every owner of the condos. So they're going to take that amount and put in the reserve fund for anything that needs to be fixed on the main condo itself. So you are in charge of things that break inside the condo, but on the outside, like the main building, the condo corporation is in charge of that. But so they need to have enough money to fix anything. So that's what the lawyers are going to look at to see how much is in there. Is there going to be enough to fix what needs to be fixed? Because they'll have a list of things that are needing to be done, what's been fixed, and things like that. So if they don't have enough money to fix a problem, they do what's called a cash call. So here's a little example. Let's say you buy a condo in a condo building that has 20 units in it. They need to fix the roof. That's $100,000 to fix. They have no money in the reserve fund, which is a very, very extreme example, but just for easy math. They have no money to fix it. It costs 100 grand. They're going to come to each and every owner of these 20 units and ask for 5,000 out of their pocket, which is called a cash call. So we want to make sure that the reserve fund has enough money in there to fix what's going to need to be fixed and that they're putting the right amount of money into there. That is a big thing. What's also what else is in these is bylaws. So what you can and can't do with your property itself. Some of them are pretty vague and just you can't do certain things outside, but you can do whatever you want on the inside. Some other condos, like those apartment style condos, some have bylaws on what you can and can't do for renovations, right? You can't put, some of them say you can't put hardwood flooring in or laminate flooring because it's too loud for the other people that are living there, right? They just want carpet in there. But every condo building and every condo corporation has different set of bylaws for everything. That's why we need to get these checked out to make sure you're not missing anything. But some more examples of what they cover is I was looking at a condo with one of my clients, and same thing. He wanted to rip out the carpet, put laminate down. Sorry, the other way around. He wanted to rip out the laminate, put carpet down. Wait, sorry, I might be missing that up here. Sorry. Yes, other way around. Hates carpet. Hates carpet, wants to put the laminate down, but there's a bylaw in your stating you cannot replace flooring with laminate or hardwood. It's too noisy for the other residents, so you can only renovate the main living areas with carpet. So he knew that, wasn't sure what he wanted to do with that, but at least he had that idea. If he didn't like that, he could have walked away from the deal. He instead decided he's still going to buy the place and just deal with whatever flooring's in there for now because it's a short-term thing. We also looked at the balcony and we realized that the balcony was starting to come apart. The flooring of the balcony was in rough shape. The railing was starting to rust away and rot away. So it had a lot of issues, but we noticed in the estoppel package that they are aware of all the balconies. There is a plan to fix all of them, starting from the worst one, fixing them all the way down until they're all replaced. We have enough money in the reserve fund to fix it. No money, no cash call to anybody to fix that. So that's good. It's good to know things like that. This thing covers everything. It'll give you every bit of information that it has on the unit. What's condo fees are, how much, what everything covers in your condo fees, how much goes to the reserve fund, things like that, maintenance funds, things like that, bylaws, what you can and can't do, your specified parking stalls, things like that. It has so much information in it. That's why it's so good to go straight to the lawyer. So that's just some things to look for that. That's only if you're buying a condo, right? So now it's going to save you a bunch of money. Again, if they need to come calling for money to fix something that you weren't aware of, or you were doing a bunch of renos and you find out you can't do it halfway through. So yeah, that's the main thing with these condo reviews. I kind of had to rush through that one because we are kind of getting to the end of our time. But yes, if you have any questions on the condo review, please reach out to me and let me know. I'm going to put in here again. Book a call with me. We can go over a lot of this stuff one-on-one. But yes, the best site I see, yeah, so there's the best site, things like that is going to be, for me, I go right to the MLS. It tells me everything about every property that's been out there. So that's where I go to. But yes, if you want to look on your own too, Realtor.ca is a big one. Yeah. So that kind of covers most of the stuff here. That's all of the home buying and the generalized thing. We covered home inspections, Schedule Cs, estoppels for condos, new builds. We covered all the stuff on financing in a generalized form. If anybody wants, if you think you're ready to go or you want to speak to Robin or whatever, book a call with us. We'll get you set up. We'll get you going. But that's kind of everything that I have covered for now. Now we get into what's going to be just the Q&A session. Hopefully you feel a little bit better about this. Again, my job is to make this stress-free. walk you through everything, help you out with everything, set up everything for you, show you the places, set up home inspections, set up all the contracts, do the negotiation on your behalf, and just help you guys along the way. So hopefully I helped you guys out with this. So now we're just kind of into, this is what it's going to look like when you book a call with me. It'll give you all my time, things like that, all the space I have available, and we can go from there. But yes, we are down to the Q&A session. I'm going to throw this in here in the chat right now. So this is all my information. This is the booking link again, my email address, my personal cell phone number, and my link to all my stuff, all my social media accounts. If that number that's been texting you, giving you updates for the webinar, that is on an automated program. So if you message it or call it, typically if you message it, I will not see that you've messaged it unless I log into the program and see it. That's just to give you reminders of this webinar. Okay, that's my personal number. Same thing when you book a call with me, it'll tell you reminders that you booked a call, but I will be calling you from my personal number. Then once we do that first initial phone call, you have all my direct information. You don't need to book a call after that. We are going to work together. Simply, you can get a hold of me anytime you need. So that's just, so that's kind of it. Hopefully I answered a lot of questions for you guys. Again, I've got time. I'll sit here and I'll answer questions. Thank you guys for attending this. Again, watch out for that email at the end. It's going to have my book, the buyer's guide, things like that. But yes, feel free, book a call with us. We can walk you through anything. I'll see if I can answer some questions here. So how long have I been a realtor for? That's a great question. I started, what was it? Just May of 21, I believe. I've been starting and dealing with all this since well before 2020, but I actually officially got licensed in 21 and started doing this full time. And yeah, since switching to EXP this year, it's been awesome. So yeah, and especially I really thankful for everybody being here for this, listening to what I have, run through all this stuff. Again, this is recorded, will be shared with you guys. Hopefully we get this all out to you guys by tomorrow, gives you the link and everything like that to watch it again, and things like that. Yeah, so feel free, if anybody has more questions, throw them out there, let me know. I know Robin, again, thank you, Robin, for answering all the questions. Well, those are really, so these are a lot of, so negotiation process, yes, there's a lot of good tips. That's more specific to each home depending on it, but what I do personally, which I know some people don't, I have a great team that I work with that explains a lot of things, and the negotiations is a big thing. So what I do is when we go to write or put an offer in, I make a phone call to the other realtor who's listing the house, and we have a conversation. I ask them a lot of stuff about the sellers, what's their motivation for selling, if they're willing to tell me that thing, right? When we go to write an offer, we want to make the offer as, what do I want to say? We want to make it as beneficial to them as possible while still being beneficial to you, if that makes any sense. So if we're going to write a lower offer than what they're asking for, which is generally what a lot of people do, we want to make everything else good. So what do they need for a possession date? Okay, well, we're going to work to make that as simple as possible for them. Choose a possession date that works for them. What do they want in, other things, right? What are they hoping for? Do they need this out right away? Or they need to find another place? There's a lot of things that go into this, right? So I like to figure out all the information I can. That way we can make an informed decision on and what we can do for negotiation. Our main goal is to get them to accept our first offer, but chances are there's going to be a counter, and then it's a whole different thing right there. But that's my biggest tip, is to make for negotiations, is to find out as much as you can about what the sellers, their needs are, and try to accommodate them as much as we can to make it easier, right? So that's my goal all the time. Current rate of housing in Saskatchewan, obviously we're still in low inventory, definitely low inventory still. So homes are still moving, not nearly as fast as what it was a few months ago. Like, it was insane a few months ago. You could not, like, the minute a house came up, you had to see it that day and make a decision that day, which is stressful because you're making a huge decision on a right now kind of thing. So it's still low inventory, but it's kind of, you're seeing a bit of a shift here. You're seeing more ability to look at different houses, make better offers, right? There are still some property out there, don't get me wrong, I'm still dealing with some that are multiple offer situations, but it's not as frequent as it was before. I remember showing a house, we had a half an hour time slot booked, and they had showings in a half an hour time slots from 8 in the morning till 10 p.m. that night. And that home just came on the market literally that day. It was insane. That's definitely not as much as it was now. Now it's a lot more easier. So future market conditions, again, we don't have that crystal ball, but right now what we say is that the interest rate right now is back to normal levels, is what we call it. This was pre-COVID levels. We called the rates during COVID the lottery rates because they were so low, but this is what usually is the normal right now, is these the low single digits, right? We're still below 5%. It's still a very good time to buy and build equity, right? It's still a very good time to buy. So yes, again, hopefully that answered a lot. We can never tell what's going to happen, obviously, but right now they've been fixing a lot of the mistakes they did back in that big crash of 2008 when they were giving everybody mortgages that really didn't qualify for mortgages. Now it's a little harder to get it. There's a bigger stress test. There's more that goes into it. So we're really trying to avoid that whole situation again. So right now, home values are still, you're still going to build a lot of equity in it. Everybody's saying, well, the market, like a lot of home sales or values are going down, which it's true because we were in such a crazy market that you could list your home crazy amount over and you would get multiple offers that even rose the price up even more. Now we're getting back to normal levels, right? Realistic levels, realistic prices of homes, right? So that's kind of, it's still a fantastic time to buy. Interest, yeah, and that's, I see that question was asked too. So yeah, now if you can buy now, if you're approved now is the time to buy. Honestly, it's just the longer you wait, if you can start building equity now is way better than waiting 6 months to a year down the road. You're already building now. The interest rates, you're going to be locked in now. It's just it's a great time, right? See what else we got. Buying versus renting. I'm going to say it every time. Renting, it's 100% interest rate. You're not paying into anything. You're paying somebody else's mortgage. So if you're renting, right, you're not building any equity for yourself. You're just paying somebody else's mortgage. And honestly, like I preach it all the time. If you're able to buy now, now is the time. Build your own equity. Have your own value in your property instead of somebody else's that's not going to take care of you and they don't care, right? This is your home. This is something you can be proud of, and definitely building equity is such a good thing. Yeah, and like we're not here to push you into something, right? Don't get me wrong, buying a home is a huge investment, and we want to make sure it's right? The home is right, make sure the resale on the home is going to be good, right? We're not going to push you into it. I do say now is the time to buy. I'm not saying like we're going to get on the phone right now, we're going to go buy a house tomorrow because you have to now. No. If you're able to buy now, we should start the process and start building the equity, start paying for something that's yours, not somebody else's that's just going to, up the rent on you on a whim because they want to, right? Because that's just what's going on. So this is still a very good time to buy. Definitely a home's definitely an asset. It's something definitely to have. You're always going to need a place to live, right? You're always going to need a place to live. And why not have it your own place to live, right? It's, yes, there are pros and cons, obviously, but I feel when owning our own home, definitely the pros of it outweighs the con. The nice thing is your landlord can fix all your stuff, right? That's very nice. Home ownership, yes, you have to pay for your own stuff, but again, they can decide they want to sell the house from under you and you got to find a new place to live. And I've dealt with lots of this lately, that it's very hard to find a place for rent lately. I've been trying to help people find a place to rent. My last my last first time home buyers that I actually helped find a place, they were moving out of their condo building into their townhouse that we bought. But the stipulation was they had to find a renter to replace them in there. Otherwise, they'd have to pay all the way till December rent. So he reached out to me. He says, Andy, can you help us find a renter for our place? You know, and I said I'd be willing to throw an ad out there, and I put an ad for their place for rent on Facebook, and my phone did not stop going off the entire day because everybody was looking for this place, any place to rent. It was insane. So again, if you can find a place and you can buy your own place now, it's the best time to do it, because yes, you never know what happens when it comes to renting. Sorry, yeah, you're right, Robin. Yeah, sorry, the home is your asset. Yeah, but the mortgage is a liability. But yeah, it's, you know, again, I always strongly preach it. Pay for your own rent, not somebody else's rent, right? Or mortgage, right? Pay for somebody else's, pay for your mortgage, not somebody else's. That's, everything's moving, honestly. Things are moving fast in the city still, and acreages are moving just as fast as well. It's just, it depends on, you got to find the right buyer for everything, right? It seems like everything still is, because it's such low inventory, things are still moving like crazy, right? Usually used to be acreages were a little bit harder to sell because, you know, you had a lot more work to deal with acreages, right? Depending on the acreage, you have your own well, you have your own septic system. My parents, they live on an acreage out in a small town, Maple Creek. I don't know if, I highly doubt anybody's ever heard of it, but small town Maple Creek, they live on an acreage. They have their own well, they have their own sewer. So it's a lot, and they got a lot of land, so they got to, you know, take care of it, right? I know that when their well collapsed on them, they lost their source of water for a while, and it was very expensive to drill a new water well. They had to find the water, drill it, and it cost a lot of money. Same with the sewer. I can't imagine how many times that sewer froze off on us when I was a kid. It was a disaster. So, but acreages are a lot of work. But they're also rewarding, depends on what you want. So things like that. Warman is a fantastic place to to be. I've been here since 2016. Robin's here. I have a cousin that literally lives across the street from Robin. I have a cousin that lives over by the golf course. They've got tons of kids. We love it here. Absolutely love it out in Warman. So, yeah, yeah, that's a great thing. So, if you want to sell your house, the equity that you build in your house is definitely there to help you with a down payment for your next home. Again, Robin can definitely explain a lot of that. Sorry, I guess that was a directness. So nobody can see. If you want to sell your home after 5 years, the money and equity that you put in your home, you can use that home equity towards a down payment for your new home. But again, Robin will be able to explain that a lot better than I can. But that's definitely why it's so much better to build equities, to help you find and grow to a bigger house. Oh, nice. In Maple Creek, right next to Cypress. Yeah. Yeah. Oh yeah, it can be rough. Them Saskatchewan winters can be just outright terrible, especially in the prairies. It's just unbelievable. It's it's gross. It sounds gross, but because we had nothing else, when we had the sewer line freeze off and the sewer pump freeze off, Dad had to bring it into the house in our one room and thaw it out. It was disgusting, but it's what you do on an acreage when it's -40 and the wind's howling and you have nowhere for your sewer to go and it's backing up everywhere. So, it can be a mess. Regina and Saskatoon, well, that's based on preferences. Hey, it's you can't even say. Yeah, I mean, Saskatoon, I love Saskatoon. It's such a great place. And then I have my old job. I used to travel all over Saskatchewan. I've got a ton of friends in Regina, and it's like everything, right? People that live in Regina love Regina. People that live in Saskatoon love Saskatoon. It's that head button thing. It's like, well, Regina's better. Saskatoon's better. Well, Saskatoon's safer. No, Regina, it's all relevant, right? It all depends on areas and things like that, right? Or neighborhoods, right? Um, I'll just say it, I'm biased, but I love Saskatoon a lot more than Regina myself, being in both places. But yeah, it's yeah, oh, what else? Yeah. Appreciation, it's home values are still going up, um, compared to, and there's lots of data. I can even send you, I can show you data from that as well on appreciation and the value of homes that have gone up. There's definitely lots of data on that. I'll have to look after this. I know CREA, so Canadian Real Estate Association, just sent out July's report about home values and home sales and things like that. So I can definitely send that out as well. Let you know about that. Yeah, definitely more. Yeah, even if you want to book a call with me, I can see, we can discuss things like that too. I'll see if I still have it. I'll just put the whole thing in again. There it is again. But yeah, oh, that's straight to you. No, sorry, hang on. Here we go. There we go. There's a lot more opportunity in Saskatoon. Yeah, definitely. I mean, Saskatoon's so diverse with everything. Regina's more industrialized, I find. Like, you get the oil fields, you get the farming, things like that, right? Saskatoon, you got farm, you got everything here. So I love Saskatoon. I find it's a way nicer city myself, but that's just me and that's my own opinion. I can't base a lot of things off of that, right? There are rent to own. There are some things to look out for when it comes to rent to own. I've had this conversation with some other people before. You just there's so many things to watch out for, right? You're still going to have a down payment. You're still technically renting. So that's where it kind of gets a bit iffy, right? How much of the money that you're paying towards this rent is going towards the mortgage, things like that. When things break, is it the landlord's issue or is it your issue, right? Depends on the contracts. It can be pretty messy, and not a lot of people do rent to own anymore just because it can be messy. So same idea. If you can flat out purchase your own home, it's just a way better option. It's a way less headache that way than doing a whole rent to own thing. Yeah, and most brokerages, most lawyers that I talk to don't really do it anymore because it is just so messy. A time of year to buy, really, it all depends. There's really no right time to buy. Well, I guess the right time is to buy is now, really, honestly. But for markets are so different, right? Like, it's not a lot of people like to move in the winter time. So honestly, if you want to buy in the winter, home sales are going to be like, you're able to get a better deal because not a lot of people are shopping in the winter, right? I bought my camper in the middle of winter. It was -30 when I went camper shopping, and I got a super great deal because it's the middle of winter. Who buys a camper in wintertime, right? Same with houses. Not a lot of people are moving in the winter because it's cold out, but lots of people still buy. So, I mean, but it's all relevant, right? You see upticks in the summer and the spring because, or in the springtime because the snow has gone away. Now it's nice out. Let's go buy a place. Then the summer kind of, so then the summer comes around and then it kind of falls away a little bit because now everybody's camping, right? And now that the fall is coming back to school, now things are going to start picking up again. It's just, it's so many waves, different reasons why, it gets busier and slower, right? Not saying home prices go down in the winter. It's just easier to buy in the winter because not as many people are shopping in the winter. More people are shopping the nicer times of the year, whereas winter, it's a little bit slower, right? Not that the value of the homes are going to change. It's just, yeah, it's just easier to look. In a sense, it will, right? When you get a home inspection. So you're not going to be able to see shingles as well because the snow is covered on it, right? But it's also helpful that way because if you see that there's snow melting on the roof, then you know that there might be, insulation issues, because if it's the middle of winter and the snow is melting off your roof during the dead of winter, that the heat is leaving your house through the roof. So that's an indication that there might be some issues in your attic. So things like that to look for. Other than that, not a whole lot affected in the wintertime because home inspections, the majority of it takes place inside the house. They're able to see into the attic and things like that, right? It's just a little bit harder to see outside because you just can't see the lawn and things like that. But it's not as bad. Like lots of people still buy in the winter time. It's right. It not really affects anything. But yeah, that's some good points of being in the winter, and it's just a little harder to show because it's freezing cold, but at least if the furnace is working, right? It tests right there. Same in the summertime, if the AC is working because it's cold in there. So it's all relevant to the different types of seasons and weather and things like that. But yeah. So yeah, I don't know, I'm not sure what what it is, but I'll definitely I'll see what that is after this. So right now they want to call it, I never call it a seller's or a buyer's market. It's just what the market is, right? Right now, what we call low inventory is, yes, a little bit more favorable for sellers just because there's low inventory. So lots of people are looking for a house. And if you're selling a house, there's lots of buyers looking for it. But as I mentioned, you're slowly starting to see a shift. That's what the raise in interest rates are trying to do, is try to get that to, because it was red hot roller coaster straight up for a bit. So yeah, it's right now you're seeing a little bit of a shift. So you're able to take your time to see play. It's slowly getting better for buyers. You're able to throw in, honestly, the last couple places I was able to offer under asking price. So you're starting to see that a little bit more now too, right? Before, it's like if a house went on the market, it was you're paying either full market value for it or above. Now you kind of see some more negotiations again, right? So it's definitely starting to shift a little bit. It's not going to be a crazy shift like you're seeing out in Toronto, Vancouver, those big cities. Saskatoon is still on a very, very level playing field here. So it's just a slow shift right now. So we're just trying to level it out. But it is getting better for buyers. It's definitely getting better for buyers compared to what I was dealing with a few months ago. So yeah, so again, very easy to look now. I can actually set up showings. Before it was like we were looking at one house pretty much a day because they would just come up, look at it, come up, look at it. Now we can look at the list and be like, okay, here's a list of 5 or 6 houses. Let's go have a look at these either today or tomorrow. And we're able to do that now, like before. So it's nice and it's more relaxed feeling when it comes to buying. So yeah, so it's definitely starting to see a little bit of a shift. But yeah, no, thank you. Thanks for coming. But yeah, if anybody has any more questions, I'm almost getting to the end of time here. But yeah, if anybody's got any more questions, feel free to throw them out. Again, book the call with us. We can definitely discuss more as we go. And it's always good to go one-on-one as well, because then it's more personalized to you and what you need and what you're looking for. So, but yeah, if anybody has any more questions, again, feel free. Let me know. Absolutely, yeah. No, like if anybody, again, I have my personal number. I'm gonna throw it out here. Again, if you want, get a hold of me that way. I do recommend, again, booking a call with me first to get that initial call, because I just want to make sure I'm ready and available for you to get the first started call. That way I'm available, because as a realtor, we're running ragged everywhere, right? Who knows? Like I'll be sitting here and hanging out with my kids playing, and all of a sudden I'll get a call or a message from somebody, and boom, I'm in the city now, right? So I want you. The booking a call is so important. But once we get that first call, we are now in a working relationship. You get a hold of me anytime you need. I will be available for you. Yeah. Would I recommend a career? It all depends on. That's a very good question. I love it. I came, honestly, I'll be transparent. I used to be in the oil field. That was my profession for quite a while. I led teams of 20 plus guys out there, and we were servicing wells, and I was gone 15 days at a time, home for 6 days and back on the road again. I lived out of a suitcase. It made good money, but I never seen my kids. It was hard living in hotel rooms more than you're living in a home. My wife was here with the kids and the dogs and taking care of the home, and I was never here. It felt like a vacation more than a home, so I was done with it. This, I'm home every day, right? It's busy, but I love helping people, and that's why I do this. So it's a roller coaster though. Don't get me wrong. If you're, I would recommend it if you're willing to put the time and effort and money into it, because it does cost quite a bit to start up. And you'll you'll have really, really good days and you'll have really, really bad days, but man, you got to really respect the grind. You definitely do. It's a grind off the start. I'm not going to lie to anybody. I've had brokers sugarcoat things on me, saying, oh yeah, you're going to make this in your first year, then you're going to make this in your second year, and all you got to do this and this. And it's a grind, but it's great. It's great. It's fun. I'm home with my kids. That you can't put a price on that. So, if you're willing to put the time and effort and live on your phone for quite a while, yeah, it's pretty good. But I've met so many cool people, so many great clients, so many great other realtors, and you just make that connection. It's pretty cool. So if you really like people and you really like handling different situations, yeah, I would recommend it. But you really gotta find the right brokerage. That's why I switched, and you got to find the right team of people to help you. So that's, I wouldn't do it on your own with no guidance. You'll just be out in the first few months, honestly. So, but yeah, no, I'm appreciative of everybody coming here. But yeah, if you got a down payment, if by January, that's still good. That's not that far away, which is sad to say. We're already we're going to be September soon, September, October, November, December, January. Yeah, that's 4 months away. So, but yeah, now that everybody knows this is what they look for approvals, you know what you need, you know how much you need for down payments, things like that. So 5% of the purchase price is your down payment. So that's something to look forward to. But yeah, it's been good. I appreciate this again. I'll stay here for as long as anybody wants to talk. Well, until probably give me another 10 or 15 minutes and I got to go put the kiddos down to bed because it's their bedtime. But yeah, no, again, I appreciate everybody for coming out here. Reach out to me anytime you need anything. Again, we want to thank Robin again for being here answering those questions, because that definitely bails me out a lot. But yes, I see there is quite a few that have already booked calls. If you haven't yet, again, feel free to. And so, yeah, we will, if anybody else has any questions, feel free, let me know. If not, we're going to wrap this up and I will get there. And I will get things out there. All right. Cool. Okay. Thanks everybody for showing up. I hope to talk to a lot of you soon. You'll be hearing from me eventually, and watch for the book and the buyer's guide shortly after this. Hopefully get it out by tomorrow. Everybody enjoy your evening, and we will talk soon. All right. See you guys.